Hello guys and welcome again to my channel. So let's continue. Our illustrative problem is just right here. And again, our topic is still at manufacturing accounting. Actually, specifically, step 1 to step 10 of the accounting cycle for manufacturing entities. So again, this is the comprehensive problem that I've made for you. No, not made. It was adapted somewhere and I changed a little bit only. So this is the comprehensive problem. So what we did in the last episode is to make these entries. Basically a we have an episode that tackles the how to make entries, and then we applied that here. Okay? And after doing this, we posted it to the ledger, which is why there are the accounts here. And we are already in the making of the trial balance. However, let me remind you again that these particular transactions were not segregated into for adjustments. Actually, although there is a label here for adjustments. However, as we analyze this particular problem to make journal entries, in my professional opinion, the four adjustments were not segregated. It's mixed up. So the regular transactions as well as the transactions for adjustments are mixed up. So these transactions here that were journalized are also mixed up. And these mixed up um, entries, journal entries, were also posted. Mixed up. These are all mixed up. So this includes regular transactions. This includes also adjustments. Okay? Which is why these balances are also considered as adjusted balances. Okay? Which is why if we tally this, we're going to make an adjusted trial balance. Not an unadjusted. Unadjusted. Adjusted. Okay? So let's erase this. So the adjusted trial balance. Oh no. Some are hard to erase. Why is this like this? Oh. It's a good exercise. Now, let's have the adjusted trial balance. Okay? So the adjusted trial balance will just be a list of these particular balances. We'll start with adjusted trial balance. We'll start with cash. Cash, yeah, the balance of cash is 504,000. So we have to put that in the debit, 504,000. And normally, the next one will be the accounts receivable. The accounts receivable in this particular problem, let's put here, is Smiley. We have 156,000. And the next one should be the inventories. And since we have three inventories, where's the accounts receivable? We have three inventories. We have to put everything, like, for example, raw materials, work in process, and finished goods. So we have work in process. The work in process is actually 160,000. Ay, where is the work in process? The raw materials is 160,000. The work in process is 50,000, and the finished goods. The finished goods. Where did we have finished goods? Here. Here's the finished goods. 62,000. So that's cash, receivables, and inventories. Next, do we have any other asset? Yeah, we have. This is done. This is done. This is done. So cost of sales, finished goods is done. Rent expense. We have prepaid rent here, right? We have prepaid rent. The prepaid rent is now from 30,000, it became 20,000. I guess that's it. That's the totality of the assets because I made the problem easier. There are not a lot of twists. Like for example, non-current assets were not included in there and other items. So that's it for the assets. Let's go to the liabilities. If we have one, we have accounts payable. Yeah, we have accounts payable. That's it. We have accounts payable. On the accounts payable, the balance is 130,000. Okay. And then we have BBG Capital, the next one. The BBG Capital is 750. And then we have the sales because there is no personal drawings in the problem. Because again, I kept it very simple. So accounts payable, sales. We have 520,000. So that one is already finished. Applied factory overhead has been zeroed out. So what are the other expenses that we have? We have cost of sales. We have cost of sales worth 438,000 based on the entry. And then aside from the cost of sales, you have rent expense. That's it. I guess that's it. As part of the operating expenses. So the rent expense is 10,000. Now let's check if ever they are balanced. Because I guess those are the only things that we need to consider. So 504,000 plus 156,000 plus 160,000 plus 50,000 plus 62,000 plus 20,000. 952. Oh no. Oh yes. That's I'm sorry. 952,000. And then 130 plus 750,000 plus 520,000 plus 438,000 plus 10,000. Oh, what's happening? Do what's happening? Let's see. We have 504. We have 160. We have the 50,000 in the work in process. We have the prepaid rent at 20. Oh, yeah, this should not be here. The 438,000 should be here because cost of sales is just like the expense. It has a debit balance. I'm so sorry. And the rent expense is 10,000. Misposting. So you have 504,000 plus 156,000 plus 160,000 plus 50,000 plus 62,000 plus 20,000 plus 438,000 plus 10,000. 1,400,000. Sir, why is it that, yeah, it's 1.4. Later, I'll make my point later. 130 plus 750,000 plus 520,000 is 1.4. Okay. So that's it for the adjusted trial balance. But then again, let me remind you that even if you got all your entries to be balanced in the journal entries and adjusting journal entries, as well as on the T accounts, it's also balanced. And then in the adjusted trial balance, of course, it will be balanced. Even if you have that, there are times that you are still wrong. It's because the adjusted trial balance or the trial balance does not give you a, assurance that you'll be able to check all those things like you did not make a journal entry, for example, for a certain transaction. So, emission, emission of a certain transaction, you have not considered it, you don't have any journal entry for it. So, it will still be balanced although it is wrong because it's missing something. Okay? The second one is that the adjusted trial balance will not um, give you assurance that you are correct in using the account titles, like just like this one. Even if your entry is debit raw materials inventory and credit accounts payable, this will be balanced still, even if you twist this one. Or else, you use another type of account. Instead of crediting raw materials inventory, you have credited work in process. This will still be balanced. Unless there are things like, for example, the normal balance was violated. It's because you have twist the entry. The ones that should be credited was debited, and the ones that should be debited has been credited. So it will have an abnormal balance here. Like for example, cash is on the credit side, which is impossible. When we talk about balances for cash, it's usually positive unless you have over withdrawn from your bank. However, mostly that should be on the debit side. So if ever you are processing some transactions, maybe instead of debiting the cash, you have credited it. Okay? So that's the problem with the trial balances. It does not give you any idea for those things that you have omitted whole journal entry. But if you have only omitted, for example, one entry in the T accounts, just like what we have had in the past episode, like we did not, I guess, where is that? Here. I guess it's 68,000. We have not posted it. Supposedly, we have to post it, but we did not. Somewhere there. I have forgotten the amount. So, if only one of the sides has not been posted, it will be detected in the adjusted trial balance, of course, because it will not be balanced anymore. Okay? So, you just have to get the difference. If it's like that, like for example, from 1.4 and then it becomes 1.3 here, the difference is 100,000. So that 100,000, if the error is because of misposting or non-posting of one debit, for example, or one credit, You immediately know because you can go through the transactions and find that 100,000. Okay? So there are other errors also. Before we go to the next steps, there are also other errors. We have slide. Slide pertains to the decimal point being misplaced. Like for example, um, this is 1/4. It could be you could type that one as 140,000, whereby instead of having the decimal point at 1.4 million, you put that right here. So that is a slide. The slide again is the misplacement of the decimal point from the supposedly to the other. So what will happen if this is the case? Like for example, the debits became like this. You just have to get the difference. 1.4 minus 140,000, 1 to 60 divided by 9. So why do you divide it by 9? So again, 1/4 minus 140,000, it's 1 to 60. The difference. If you divide it by 9, you'll get a whole number, 140,000. What does it mean? There is a strong probability that the error is a slide. So, of course, if you already know the possibilities, then you will not trace everything. Like, everything can be a possibility of an error. You just have in your mind, it could be a slide. Okay? So, if it could be a slide, then you can focus on things that might be recorded by you with the wrong decimal point. Okay? So, instead of saying that, oh, where did I get all those wrongs? There are a lot of possibilities. Where did you get wrong, right? Which is why it's not balanced here. When you divide it by 9, the possibilities becomes narrow. Okay? It could be a slide or a transposition error. What's transposition error? Transposition error is when you put 1,400,000 and then the error is 1,040,000. That's transposition error. Whereby the 4 should be here on the second, on the 100,000s. You put that in the 10,000s. So that's a transposition error. Okay? So, what will happen? 1/4 is the right balance. Like for example here. Or even if you don't know what is the right balance, you just have to get the difference. 1.4 minus 1,040. So the difference is 360. You divide it by 9 also. You divide by 9. That's 40,000. Whole number. So that means if you divide their difference by 9, and what you got as an answer is a whole number, there are no decimals or whatsoever, then the possibility of the error is maybe a slide or a transposition error. And again, the benefit of that one, by dividing 9 and getting the whole number, the possibilities of errors will become narrow. Instead of thinking that there are a lot of things that could be wrong. Okay? So, that's it for the adjusted trial balance and the limitations of the trial balance and the tracing of an error, so that you'll be faster in tracing some errors. But of course, let me remind you that if ever you have made a journal entry and adjusting entries already, you just have to be very careful in the next steps because everything is a process already. After the adjusting entries, you have made the adjusting entries and the journal entries. The analysis stops. You just have to follow the step-by-step process. Okay? So that's it for the adjusted trial balance. Let's complete the worksheet. So again, we will not start with the unadjusted trial balance. We started with adjusted trial balance. So you just have to classify the expenses side. And based on this, you just have the income statement, debit, and then credit. Only the sales of 520,000, and then the cost of sales of 438,000, and then the rent expense of 10,000. That's it. Okay? So, I don't know if I still remember the problem. I'll just, so what will happen? This will become 520,000. This is 448,000. So, there is lacking here. 72,000. This is the net income. So it's 520,000 here and 520,000 here. Oh no, I haven't been able to take a look at the problem because maybe if we make an income statement like in the financial statements, somebody will try to ask, what is the composition of that income statement, cost of sales, 438? Okay, I'll look at the video later. Now, let's go forward to the statement of financial position. It's a bit, wait, it's a bit harder. Wait. Ugh. So we are still at completion of the worksheet, but now we are using 6 columns only for the adjusted trial balance, the income statement, and the balance sheet alone. We did not include the unadjusted because our T accounts here, we have already made um, the all of the entries present here, all the adjustments and the regular transactions. I would like to repeat that always. So let's finish. So 1, 2, 3, 4. Let's have the statement of financial position. We have the debit and the credit. So whatever it is that you did not forward here in the income statement columns, you have to forward it in the statement of financial position. Just like the cash, we have 504,000. We have 156,000. You have raw materials of 160,000 at the end, and we have 50,000. And we have 62,000. And then we have 20,000. Yeah, that's it. And then we have 130,000 on the credit. And we have 750,000. And we have, no, 520 is already in the income statement. So what will happen? You have 504,000 plus 156,000 plus 160,000 plus 50,000 plus 62,000 plus 20,000. So we have 952. So 130,000 plus 750, you have 880. And then the difference should be here 72,000. Again, this pertains to net income. And we will get the same 952,000, 952,000. Okay? That's it. Okay? Now, let's go to the next one. Since we are already through with the worksheet. Again, this worksheet is only 6 columns because the adjustments columns as well as the unadjusted, we're not going to fill that up already because all of these things are already adjusted balances. Okay? So, what's next? Of course, it's the making of the financial statement. But then again, if you take a look at this one, the income statement, for example, we will start at the income statement. On the income statement, of course, you'll just have to see sales 520,000 and then the cost of sales is 438 and then the gross profit is the difference between the two. And then on the operating expenses, we have 10,000, you deduct it, then you'll have the net income. However, you might be asked, what are the components of that cost of sales? So what will you do? Let's find the problem that we have been solving. I've already erased it before taking a picture. Sorry. Let me take a look at if ever we have that here. Where will I go? I'll go to the past video that we have. Where is it? Let's go to content. And then, here we go. Yeah. Based on here, okay. Based on here, again, the income statement could be like this. Sales. The sales is 520. And then the cost of sales could be 438. The difference, however, if 520 minus 438 only, then I guess we're gonna come up with a gross profit of 82,000. And then the operating expenses, what we have there is only the rent expense. You can put immediately 10,000 and you'll have a net income of 72. But then again, if you will be asked, what is the component of this one? Like they wanted it to be, what do we call this? Detailed. How did you get the cost of sales? So, which is why I went with our last problem where I did not yet erase the illustrative problem so that we can answer that. So, what will happen? First off, you can compute the raw materials used first. So, if this has computation, you can put cost of sales. So, you'll start with raw materials. beginning. And based on the problem, the raw materials beginning is actually 50,000. And then you go to the raw material purchases. On the raw material purchases, if you wanted to be direct about it, you have purchased raw materials of 300,000, both direct and indirect. So you can put 300. However, there is a return defective raw materials worth 20,000. So the net raw material purchases, if you wanted to be direct, it's 280. And then this is 50 plus 230. That's 330. What do you call that? Those are the raw materials that you could use, available for use. And then you have the raw materials ending. And according to here in the problem, the raw materials ending is 160. So it's very difficult if you are the only one. So 330 minus 160, the raw materials used is 170. Okay? So, by the way, I would like to emphasize that again, there is a T account analysis style of computing for the cost of sales. So there are three T accounts that you could make: the raw materials, the work in process, and the finished goods T accounts. However, I realized something just now. You also need to be very master of this type of presentation and computation of cost of sales, because in the actual work, it's very difficult to make a report using the account analysis. It should be a report just like this one. Okay? And now, it said here in the problem that, let's continue, that 40% are indirect materials on the raw materials used. So, meaning, if we wanted only to get the direct materials used, you have to multiply it by 60%. Because if the 40% are indirect, 60% are the direct materials. So direct materials used. So 170 times 0.60, you have only 102. So if you have the direct materials already, the cost of direct materials, you go to direct labor. So on the direct labor here, if you still remembered, we have 150 direct labor that was paid. And then you go to the applied factory overhead, which is in this case, according to the problem, the applied factory overhead is actually 80% of the direct labor. So 150 times 0.80, you have 120. So you have now the total manufacturing cost, or the cost for the products, the main costs for the products, direct materials, direct labor, and applied factory overhead, which is 102,000 plus 150 plus 120. We have 372,000. Now you have work in process beginning. The work in process beginning, according to the problem, is 30,000. So that means those partially completed last year, this is the work in process beginning, plus your work to be done today based on the total manufacturing cost. We're looking at the total cost that we have to find is the 402, or the to be accounted for. Total goods placed in process. So where did that 402,000 go to? So first off, it went with the unfinished at the end of the current period. The work in process end, according to the problem, is 50. So on the 402, we could already explain that the 50,000 went with the partially completed. So 402,000 minus 50. So meaning, 352 is the cost of goods manufactured. The finished for this current period is 352. Does that already answer where this 438 came from? No. We are still at cost of goods manufactured and we are out of space already. So what are we going to do? We could use here, here, here. So let's copy the cost of goods manufactured. We have 352,000, the finished one. You have to add the finished goods beginning. So the finished goods beginning are those goods that were finished in the past period, however, it was not yet sold. So the finished goods based on our problem is 70,000. So meaning, what are you going to get? The finished during the current period plus the finished last period which are unsold, the total goods that you'll be able to sell at the maximum is 422,000. And then we have the finished goods ending. According to here, the finished goods ending is 62. So of the 422, everything was sold except the 62. So the sold is, cost of sales is supposedly 360. Okay? 360. I guess it's 360. Before adjustment for factory overhead. Okay? That's the cost of sales. But since, if you remembered, we have an adjustment that was made because if you're going to remember, we have paid indirect labor of, how much was the indirect labor? According to the problem, we have paid 130,000 for the indirect labor. So that was stored in the factory overhead control account. We have also indirect materials, which is the 40%. 170, 102 is the direct materials. So the difference of 68,000 is the indirect materials, 68,000. Those are all stored in the factory overhead control account with a debit balance. However, the applied is only 120 here. So what will happen? According to the problem, the balancing figure is the cost of sales. So factory overhead control must be closed with this one, which is 198,000. Okay? And then we have the applied factory overhead, which is only 120. So that is very much under applied and very much unfavorable on the part of the company. Because applied factory overhead is actually the expected factory overhead based on historical experience. So the expected cost that we are to incur is only 120, but the actual is 198. So that means we overspent. Okay? So that's why it's under applied unfavorable on the part of the company. So the difference is in the cost of sales, which is, I guess, 78, 198 minus 120, 78. Debit. So the normal balance of cost of sales is debit. So you have to add the adjustment under applied factory overhead, which is 78. So 360 plus 78 equals cost of sales that is adjusted already is 438. That's the composition of the 438. So that's the income statement. Okay? Let me check if ever it's the video is too long already. It's too long already. So we are at step 6, the making of the financial statements. And we started with the preparation of the income statement. And I highlighted again the cost of sales computation based on the illustrative problem because it should be the center of our discussion when we talk about financial statements for manufacturing entities. Okay? Let's complete the financial statements in the next episode to keep this video short. So if you learn, please click subscribe and like also and share it to those who need it. Okay? And also, since I am developing my discipline, which is posting a video every day for the next 3 years, for example, so that I'll be able to help those students that are struggling, especially if ever we're talking about this cost of sales, no, cost of sales. This manufacturing accounting in the college are killer subjects for some because it's difficult. So after 3 years, maybe I'll stop. And of course, since 3 years is very, very far, let's not talk about that. So again, keep on watching. Select all notifications for the new projects and the new videos that I'm going to upload in this particular channel. So thank you for watching and see you on the next one.